Hey guys, what's up? Good to have you guys back. So today I'm going to be teaching you guys market structure and candlestick patterns. You understand? So I want you guys to always remember that market doesn't always move up in a straight line. It always goes up, it pulls back, then it goes up again. You understand? And I want you to look at the market like a wave. You understand? Look at market like a wave, and I want you to like ride the wave. You understand? Don't ever go against the trend. Always ride a wave, and this is how you're going to be like very profitable. So now let's look at the market. When we're talking about market structure, we're just basically looking at an higher high here, and what? An higher low. Or if it's going to be in a downtrend, we're looking at what? Lower highs and lower lows. Now, there are differences I want you guys to like understand when trading the forex market. You understand? You can have a very good analysis, technical analysis, but I want you guys to always look at the candles. The candles are the ones that actually say a lot. Do you understand? You can do a lot of markings in your chart. You can say it's going to go up, it's going to go down. But if you don't take attention, if you don't pay attention to the candles, you will definitely lose money. Do you understand? So candles are like actually very important. We are talking about reversals. We are talking about momentum. We are talking about pressure and so many other things. So now let's take a look at this candle right here. I told you guys any candle with a long wick actually means, not all the time, but most of the times, it actually means change of direction. You understand? In the forex market. Do you understand? So right now, I don't know, many of you might not really know how a candlestick like this is being formed. So let me try to like explain to you. I don't know if my book can explain. So let us say, okay, oh, that happened. Okay, so let me try to like explain to you with my book, right? So let us say the forex market actually starts like this. Market goes up, market comes down, it creates a wick. That's the wick we are actually talking about right here. Do you understand? Then from there, market creates a body. Do you understand? The market it opened here, it went up, came down here, they started going down. At a particular point, market will come down, then to go up back, then it will close at this side. Do you understand? So we call this the wicks, and we call this the body. Don't mind my drawing. Come on, guys. So what the market do at this point now? I'm trying to like give you guys an example, right? At this point, market opened here, came down a bit. You can see there's a little wick here, came all the way up here, came down here, then it's closed. That's the reason why we have this. You understand? So we have a body and we have a wick. Now, what does wick actually mean? You understand? What is wick? Wick actually means a red candle that was added to this particular green candle. So let me give you guys an example. Just watch. So now, this is actually the 2 hours time frame. You guys actually saw a wick on the 4 hours time frame, but if you look at it, it was actually a red candle together with a green candle. You know, I explained to you guys about candles. I told you guys market always forms a candle every single second, every single minute. You understand? But when you're trying to like look at markets on different time frames, maybe on the 5-minute time frame or on the 4-hour time frame, these candles are like put together to like give you one particular candle. If you're trying to look at maybe market in 1 week, it will add all the candles together and give it to you in 1 week. You understand? So at this point, the wick you guys were seeing there was actually this red candle added together with this green, which actually gave us a wick. Do you understand? And market started what? Going down. Started what? Reversing. So a wick, guys, actually means that market wants what? Change direction most of the times. You understand? So always look at it. That's one. Number 2, talking about candles also, look at the momentum of the candle. How powerful the candle is. Or let us say how full the body of the candle is. Okay, let us say we were trading this pair. You can look at sometimes market, the candles, even though this is a 2-hour candle, you can see that this market, this candle was actually like very full. While you can see that even though it's in the 2 hours time frame, some were like very little. It shows that the sellers do not have power again in the market. You understand? It's actually sellers that make markets come down and buyers to actually like go up. Do you understand? So at this point, we saw these little candles, the market came down here. You can see that all of a sudden, right, market went up. Look at this candle also. You can see how full it is. Look at it. It is like it has no wick. Do you understand? Anytime you see candles like this, it actually means that buyers has come into the market and there's about to be a momentum in the market. Do you understand? Then what actually happens after that? You can see this big green candle. You understand? Now means buyers has like entered inside very well. Then from there we saw these little candles again. Anytime you see little candles, it means that market wants to what? Change direction. You understand? It means that, oh, the buyers and the sellers, buyers are no more in control anymore. That means sellers want to actually like get into the market. So just like as we saw here, little candles before market changed. Just like here also, you saw little candles before actually like market actually moved. Same here also, these little candles before market went up again. Little candles before market like came down again. So always understand. And anytime you see that market is an uptrend, like I say, always be looking for buy possibilities. You understand? You cannot see that market is going on an uptrend and be looking for sell possibilities. It does not mean that you cannot sell. You can actually trade a pullback. You understand? But you don't really know how far that pullback will go. You understand? So anytime you are looking at anytime you see that market is actually like moving in an uptrend, the next thing that you guys should take note, or the next thing you should be looking for, or the next thing you should be thinking of doing should be to buy. Do you guys understand? So that is it. So like I told you, look at the candles very well. Look at this is market structure. Look at the candles very well. Number one, the wick. The wick actually means that what? Reversal. Market wants to change. Market might be going up before. Then at this point in time, market might want to like come down. Do you understand? That's the wick. Number two, the body of the candle. How full is the body of the candle? You understand? When you see that this candle was like very full, you can know that, oh, we can still sell more. Market still wants to sell more. Do you understand? Look at it. But when you see that the market is just like plain, the candles are like so little, you understand? At that point in time, you might not really know maybe market wants to like go up or come down, you understand? Unless you do your analysis and say, okay, maybe market wants to like change direction or market wants to continue the trend. You guys understand? So come on, let's go. So that's the first thing. The first thing, trend. First thing is what? Candlestick. Always look at the candlestick. Now, what I always say is, don't forget that everything about technical analysis and about trying to analyze the market, it all means that whatever happened in the past can actually predict what will happen in the future. Just like somebody said, it actually means that whatever happened in the left-hand side means it will happen in the right-hand side also. So what does left-hand side actually mean? It means that whatever has happened in the past means that it might what? Happen again in the right-hand side, it might happen again in the future. So we're talking about market structure. We're talking about trend. We're talking about trends, higher highs, higher lows. That's exactly what you see in the market. So anytime you see a market, you see the charts. Anytime you see the chart, I don't want you to look at it as maybe, I don't know, back then when I didn't like Forex, I used to look at it like all these radio waves, you understand? The next thing you guys should be looking at, anytime you see a chart like this, you understand? The next thing you should be looking at is the trend. The trend, you understand? The trend. Where is market going to? Is it going up? Is it going up or is it going down? You understand? After you've seen it like this, the next thing you should try to spot is your support and resistance, your areas of value. Where is market reacting to the most, which is actually very important, because markets might always want to go back there. You understand? I told you guys you should always use your box to like spot it. Your areas of value. You understand? This is your area of value. You understand? Markets reacted here countless times. You understand? This is not the only area of value we have. We have more. Do you understand? So I'm trying to like analyze. I don't want to just like come here and give you guys a analyze market. I want you guys to like see as I'm doing it, because the more I practice, the more you guys will like learn to like do it yourself. Do you understand? So we're moving. We can actually spot another area of value here also. I'm trying to like draw. I don't know if there's no network. Well, I guess network is so bad. Yeah. It's not actually like working. Guess my internet connection is bad, because you always need like internet to always like connect these things. So let me see if I can try to move this to the top. Let me see if I can try to like move this to the top, because the new one is not like forming. Oh, it's not even moving. So I'm trying to like show you guys, right? So we have under area of value. Market reacted here, market reacted here, reacted here. At this point in time, market acted as a what? Like a resistance. At this point, market acts as a resistance also. But when market went above, when market like broke below this higher high here, market did what? It came back here. What did it do? Went up. It bounced up. Market went above, came back here. What did it do? Bounced up. You understand? So anytime you're given a chart like this, next thing is try to analyze. Number one, try to spot where market is going to first. Is market going to the upside? Market going to the downside? Spot your area of value. You understand? Sometimes try to like try to put things like this, knowing that okay, that won't work also because my network is like bad. I was trying to like put some lines, try to like put some lines in the chart, you understand, to show that okay, market broke above the what? The previous higher high. Do you understand? Market broke above the previous higher high, or if it's a downtrend, know that market went below the previous lower low. Do you guys understand? So yeah, that's it. So number one, always look at the candles. Look at the candles. Look at the wick. Look at the body. That's one. Number two, always ride the wave. If market is going to the upside, always ensure that you are trading towards the upside. Do you guys understand? I'm going to like teach you guys how to spot reversals, how to know when to like enter and trade, when to buy, when to sell, stop loss, and so many other things like that. Your risk management, I'm going to like teach you guys. Number two, your momentum. Momentum is actually very, 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 very important. Most of the times, market consolidates for some time before it continues its uptrend. You understand? Inside this candle, as you guys can see here, this green candle, there are smaller trends inside. You understand? Even though we have the big trend, we have the overall trend, there are some smaller trends inside the normal trend. You understand? Markets always move in a zigzag direction. That's why I told you guys there's no really best time frame to trade, but you should always know that the higher the time frame, the more accurate your trading predictions can actually be. Do you guys understand? So yeah, that's it. Because when you're trying to like trade the lower time frame, you can see spikes from news, you can see manipulations happen, and so on and so forth. So try to like always trade the higher time frame. It has always like giving me an edge when trading the market. Higher time frames like 4 hours time frame, the daily time frame, 2 hours time frame, and yeah, that's it. And sometimes if you want to like take your entry, you can try to like go to like the lower time frame, like 1 hour, and so on and so forth. But some people actually trade the 15 minutes, some trade the 5 minutes, and it works for them, you understand? Just do whatever works for you. So that's that. So from now, I want us to actually like move on to what? To candlestick pattern, right? Welcome to chart pattern. So at this point in time, you guys can see that there are different kind of patterns, you understand? We have the reversal patterns, we have the continuous pattern, and we have the bilateral patterns. Do you guys understand? So now, what are the reversal patterns? There's something called the double top pattern. You understand? When you see that market actually goes up, comes down, goes up again, we can say that market will definitely like come down to this particular point. These are scenarios that are like happened in the market countless times in the past, and people have been able to like spot it. You understand? And I have actually like used it. There's another pattern called the head and shoulder pattern. You can actually like screenshot this, keep it. It should actually like help you in the market. You guys understand? So we have head and shoulder pattern. Markets like from here, markets went up, came down, went up again, came down. At this point in time, the double top, they will be in the same place. You understand? But this head and shoulder pattern, this one is always like above, and this one are always like close. They're always like kind of close. So from there, you might what? Sell, and your target is below. You understand? We have the rising wedge. You guys understand? So market goes up, acts like a flag. You understand? Some call it a flag or something. It's not really like a flag, but you see that sometimes market like goes up, acts like this, then market like comes down to this place. So we have the double bottom. It's actually like the double top, just like it is just like the other way around. You understand? This is actually like for the uptrend, and this is for the downtrend. So this is also an inverse head and shoulder pattern. Same thing also. Market comes down, goes up, comes down, go up. At any point in time, you can actually call this a what? a resistance. You understand? This one here is like a what? A support. It's supporting market from like going below. But when market like breaks the what? The support, market goes all the way down to where it was coming from before. Most of the times, all these things always work. So we have the what? The fallen wedge. All these things are what? Reversal pattern. These are when market wants to change direction. You understand? Market might be going in this way before, it will act, then to come down. Or market might be coming down, then to act, then to like it will go up. So that is that. Then from there, let's go to the bilateral patterns. So we have the ascending triangle. Do you guys understand? At this point in time, you cannot really tell if market wants to go up or come down. You just have to use the overall trend. You understand? That's why I tell you guys, try to always use the overall trend. Try to always use the higher time frames. Because when you look at the higher time frame, you'll be able to tell, oh, market, let me say, yearly or monthly, market has been going down. So you always understand that you are to ride the wave and like to keep going down. But it's possible that you might enter inside the lower time frame, like the 15 minutes time frame or the 10 minutes time frame, and you discover that, oh, market is not actually going down. Market wants to go up. But the overall trend said it's going down. But in the lower time frame, you still see, I told you guys, market always moves, go up, come down, go up, come down, go up, come down. So even though inside that trend, you might still see a little bit of up. You understand? You might still see a little uptrend. That doesn't mean that market wants to start going up. No. Look at the overall time frame. Sorry, Abby, am I correct? Yeah. Try to look at the overall time frame. Look at markets on the larger picture. So looking at this bilateral pattern, you might not really know if market wants to go up or come down. But when you look at market from the higher time frame, you'll be able to like tell if market wants to like go up or it wants to come down. So the continuous pattern. The first one was reversal pattern. Do you guys understand what was happening? If market was going up, it will act in a certain way, like the double top. You understand? Or the head and shoulder pattern, the market will like come down. It is reversing. It is changing direction. You understand? The bilateral, you don't really know. You can't really tell if market is going up or it's coming down. You understand? But when you see them, you can be so sure that, oh, at this point in time, markets will not continue consolidating. It wants to like go up or it wants to come down. But the continuous pattern, this one, you are so sure that if market was going up before, if you see this kind of patterns, you can see that market wants to what? Keep going up. Or if market was coming down before, you can see that market wants to what? Keep coming down. Do you guys understand? So we have the continuous pattern. Market from here, market went up. You can see, after that it was going down before, but no. Market wants to work, keep going up. You guys understand? It's called the falling wedge. We have the bullish rectangle. Market went up, acted like this, and it went up again. So we have the bullish pennant. What did market do? Market went up, act like this, and went up. We have the resin wedge. Market came down, acted like this. That's why I told you guys, always try to use your trend line. Use your trend line to like spot so many things. Pull lines on the markets. On your chart. Don't be scared. You understand? Pull lines on chart. Try to like look at markets very, very clearly. You understand? Let me tell you, a lot of traders are out there trying to like make money, and you must ensure that you are the one that will make money. You understand? So feel free. Put lines on your chart. Put trend lines. Put support and resistance. Put break of structure. Anything that will like give you an edge in the market. You understand? So that you can identify these patterns well. So you can identify if market is going up, if it's coming down, and it can give you an edge of when to sell, when to buy, when to close, and how you can make profits through the forex market. You understand? This is actually called a resin wedge. So market came down, acted like this, and the next thing is your target is what? Down there. This place right here. Why? Support and resistance. I told you guys, because market acted here before, the next thing that markets might actually act on this straight line before. So we have the bearish rectangle. Market came down, consolidated like I told you guys. Then what? Market was continue the trend. Bearish pennant. Market came down, acted like this. Market is what's coming down. So that is all for candlestick patterns. Do you guys understand? I hope you guys learned a lot today. Don't forget, screenshot all this, keep them on your phone or save them on your device. Market actually acts like this before. Most of the times, they always move in this direction. Do you guys understand? Trust me, you can make so much money from Forex. Forex is kind of easy if you understand. Like I always tell people, always ensure that you learn. In any skill you want to do, the first thing is for you to like learn. You understand? All these things, I had to learn them first, and that's the reason why I am here today. So you also ensure that you are learning. Ensure that you are learning. You understand? It's not just about just watching this video. Ensure that you are learning. Get a demo account. Open trading view. Try to spot all these all these patterns on your phone, you understand? Ensure that you put in the work, you understand? Try to like understand all this pattern. You just watching this video is not enough, you understand? You doing the work is actually like what is very, very important, you understand? Go to your trading view, put lines on your chart, put trend lines, try to see all this stuff that I'm saying, try to like put them into action, you understand? And trust me, with God, we will get to the top. So that's all for now. See you guys in the next class. Peace.